Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. All right. All right. Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. Okay, so can you please hello everyone. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. All right, amazing. Can you hear me very clearly? If you cannot hear me very clearly, please let me know as well. Yes, the website is supposed to be streaming the two strategies. The website is supposed to be streaming the two streaming strategies. So this one is supposed to just be for the live stream. So we're just making some adjustments, which Paul is going to let you all know. So, all right, amazing. And I also wanted to make sure the cracking sound it stops, because I think us using one live stream for the two streaming strategies and also the live streaming as well is just messing with it with the computer. So it's best to just find a way to separate the two. So if you can hear me very clearly and also can see my screen very clearly, just let me know one last time so I can then go over to the charts. Okay. So in this live stream, I'm going to talk about all right. Thank you so much for your confirmation. So in this live stream, I'm going to be talking about our trade idea on US 100, the reason we got into the trade, our entry, stop loss, and our take profit position as well. So the first thing to note is before we get into any trade, we always make sure we understand what the market structure is, whether the market structure is bearish or bullish. So in this case, you can basically see clearly that the market structure has been in an uptrend. Price has consistently been trending to the upside. So all we're looking for is to see areas the price will potentially come back into for a retest and then potentially continue towards the overall market direction, which is to the upside. And in this case, I outlined the key levels, the points of interest that I'm watching. And right here, you can see those points of interest outlined very nicely. You can see the key levels, the inefficiencies, resting rights here. I'm just deleting everything on my chart so you can see it very clearly. So far, you can see this is our overall high right here. And then we'll have this low, and eventually we created a higher high right here. So all we're anticipating to see is for price to come for a retest. Basically going to be either this key level or this key level. Now, because we don't know which of this key level price is going to use as the next support zone before a potential continuation to the upside, what we do is we mark out these two key levels. You can see the two inefficiencies. We'll mark them out and then we wait for a shift of market structure on the 30 minutes time frame. And so far, you can see price mitigated this one. At the moment we saw that mitigation, we scale down to 30 minutes time frame to look for a 30 minutes shift of market structure. And right here you can see clear as day we have a well evident high low break of structure. After seeing this break of structure, the next thing we're anticipating to see would be for a potential retest. This is the last down close candle before an expansion to break that structure. So we're anticipating to see price either mitigate this key level or run the sell side liquidity below the key level. And as you can see, so far price came to the downside, took that liquidity. After taking that liquidity, the next thing we want to see is a 5 minutes or a 4 minute shift of market structure. Once we see that, we're scaling down to another time frame. So we'll go to 5 minutes time frame. You can see after price dived into that position right here, you can see this was the point of interest, the last down close candle before expansion, the broke structure on the 30 minutes time frame. So right here you can see Price created a high, created a low, created a high, created a low, trending to the downside on the intraday levels until we broke structure right here. The 5 minutes time frame structure, this is still the same thing as the 4 minutes time frame shift to market structure. I'm going to take it to so you can see that they both align as well. And right here you can see 4 minutes high, 4 minutes low, break of structure. The next thing I want to see is for price to retest this key level, the high more specifically. So once price retests the high, I'll be looking for a 2 minute shift to market structure to the upside. And the moment I see a 2 minute shift to market structure, the next thing I'll do is to look for entries into the market. And so far you can see very nicely. I'm just going to remove the bar replay to make this faster. So we'll go to 1 hour time frame. And now on the 1 hour time frame, you can see very clearly price came down to the red line being the 5 minutes high, mitigated that key level. You can see the red line right there. That's the 5 minutes high. The moment price mitigated it, all I want to see is a 2 minute shift to market structure to the upside. The moment I see that, as you can see, we'll have a high and a low on the 2 minutes time frame, and then right here we'll have a break of structure. The moment it got broken, this last down close candle is supposed to be my entry, but due to slippage spread and I don't know what broker you're using, I decided for us to use this key level, the open of this the close of this inefficiency as our entry position, so that be that as it may, whatever broker you're using, price coming into this position, it's definitely going to activate all our entries and take us into the market. And so far, very nicely, price came into that position, mitigated it, rallied, came down again, mitigated it for the second time, took liquidity from this low, and after that the next thing we saw was an expansion to the upside. Right there you can see very nicely price expanded. Now if we wanted to get another entry into the market, I'm still going to show you how to do that. To get a re-entry, what we do is we call this a new high, and then we call this our new low, because this is our overall high, overall low. Now you can call this a lower high and a lower low and a break of structure. Price came down to retest it, but personally I wouldn't use this as an entry. I'll prefer to use this overall high and this overall low as my range. And after this break of structure, what I would have done if I wanted to get a re-entry, again another entry being the second entry, I'm going to use this high as an entry and then this low as my stop loss for another second entry. So the point of this is for you to know how you can pyramid into the market, having several entries, entry number 1, number 2, number 3. And right here you can see that very nicely, beautifully, price came in, mitigated it for re-entry position into the market on the same trade. So let's go to 5 minutes time frame to see what this looks like. So on the 5 minutes time frame, you can as well see that price even came to that entry multiple times. It came to the entry the first time, came to the entry the second time, and then we eventually saw a rally. So if you were on that trade, you can see the second entry, you would have been up 1:6.5 already. And so far we're still in the trade, we're still in profit. You have to also recognize where price is currently at right now. So the reason for that is because in as much as I'm bullish, we still need to understand that right now we're resting at a very significant key level that can also cause some level of reaction, maybe a reaction to the downside and potentially continue higher, or a potential reversal could also occur from this position. Now, it doesn't mean that the price is definitely going to reverse from here, but the reason for taking note of this things is in case if anything happens from that position, you basically know what to do. So in this case, you can see that key level is literally resting right there. And let's also check to see whether we do have any high impact news coming out soon. So if we check to see high impact news, today is Wednesday, so we'll have a high impact news coming out by 1:15 p.m. So that is gonna do one or two things. It's either gonna constitute for a potential expansion to the upside or a potential reversal. So that means if price comes into this position, that is basically gonna be about I think this trade is a 1:9 risk to reward, but price coming into this position where the daily inefficiency is resting is going to be a 1:5.8%. So if you're on the trade, you're basically going to be up about 4.78%, which is incredible. So you're very, very free to close the entire position, take your profit, or close 50% of the profit and then hold the rest. So that would be a better option, closing 50% of the profit when price comes here and hold the rest and wait to see whether it's going to continue higher to smash the take profit position. I'm also going to show you how I do quantitative analysis as well in order to ascertain where price is going. So if we're bullish, so you can see we'll have the low on the 1 hour time frame right here that created this high right here as well, and you can see that is about 2.87% to the upside. So after coming down here for the retest, I'll be anticipating to see a potential continuation to the upside of 2.87%. Now, usually it goes higher. It could go as high as 3% or even 4% eventually. But in order to be conservative and not be greedy, I'll be working with 2.87%. And look what's resting at 2.8%. That is a low resistance liquidity resting right there as well. So this makes it even a higher probability for price to come to that key level to smash this all-time high, previous all-time high, and then eventually even creating a new all-time high, because overall I still remain very bullish on NASDAQ. Once this high gets taken, I'm out of the market. I'm not really going to be waiting to hold price to run this high right here. This one is my target because 2.87%, my quantitative analysis is already showing me that this is the target. Next draw on liquidity and also low resistance liquidity as well, showing me that it's going to be an easy key level for price to smash through. So that is my analysis on US 100 and what I'm anticipating to see, and hopefully we can get this 9% banked today, being Wednesday. Remember, on Friday we're not going to be streaming, and the reason is because we do have non-farm employment change on Friday, and we usually don't stream on Fridays when we have non-farm employment change. So that being said, we're going to look at what's happening with the foreign currencies like Aussie. In the previous live stream, I talked about my analysis, and I said for me to get into a buy on Aussie, I want to see price come down to this position. Even though in the morning live stream, price was definitely at this key level. It was at this key level back then, but I said that I'm not interested in buying this. I showed you how you could have still gotten into a trade that would have made you 1:3 risk to reward ratio. But personally, I didn't get into the trade because I didn't like the setup. Now you can see that after price mitigated this extreme premium zone, the next thing we saw was a displacement to the downside. So let's see if the mitigation, whether it tapped it, and you can see how it tapped it very nicely, very beautifully, and then rejected off that position and started trending to the downside. Now there's something you're gonna be looking at my chart and you'll be wondering, this Fibonacci, why is my Fibonacci the way it is? Why is it not going from the low, and why is it not getting to the high? And how is it still so precisely perfect working after price mitigated here? It just worked so perfectly and rejected price to the downside. The reason for that is because I used only the bodies of the candle to draw this Fibonacci from the 4-hour time frame. You have to understand that. Let me clear everything on my chart so you can see what I'm talking about. Let me just use a different chart to do this because I've already marked up this chart. So I'll use this chart and I'll wipe everything clean. So now you have to understand that the bodies of the candle is all that really matters. The wicks is an opportunity to run your stop losses. So let's look at the bodies of the candle. If we use the line chart, it's just going to show us just the bodies of the candle. And the line chart right here is showing us that this right here is a high, a low, a higher high, a higher low, and a higher high. It's showing us that this is trending to the upside. So our focus is for this to continue to the upside. But if we look at the bar chart, you can see that this low right here, this is not a, this low right here, if we're looking at this, let me show you. Let me just make it so we can basically understand what I'm saying. So right here, we'll have a high, we'll have a low, and then right here, we'll have a higher high, and right here, we'll have a higher low, and right here, we'll have a higher high. But if we look at this on the bar chart, you can see it's not the same. It's not showing us the same data, the same information. And right here, it's showing us this is lower high, lower low, and then this is a higher high and then created a lower low. And then this is a higher high. So the line chart is showing us exactly what the market is doing, but the bar chart is trying to manipulate us to believe that this could have been a potential run on liquidity and price will continue lower. But that is not the case. I still remain very bullish on Aussie, and I'm still going to stay with my analysis for the Aussie to continue higher. And I expect to see an impulsive move to the upside on Aussie dollar to expand higher into the weekly inefficiency resting right here. This is my key level. This is my drawn liquidity on Aussie. Everything Aussie is doing is to distract us from the point that this key level is the next draw on liquidity and price wants to rally into that position. So in order for us not to get distracted, now we use the line chart, and if we draw a Fibonacci from the line chart low to the line chart high, resting right here, you can see that clearly. This right here is our extreme discount, and this is the area we are anticipating for price to come down into for us to buy it and continue higher. Now let's use this line chart as well to draw our Fibonacci, and look what we have right here. So I'll remove this one briefly. So look what we have right here. If we use that on this one, you can see this is the extreme discount, and look how price came to the extreme discount, accumulated and continued higher. But if we go to the bar chart, you can see that price actually dropped lower to run the liquidity. So what does this tell you? How does this help us in our trading? How this helps us is the fact that we do this analysis, we mark this out on the line chart, and we leave price to do its thing, knowing fully well that this key level is an accumulation zone. So once price is in here, below it's in here, all we'll be looking for is a shift in market structure on our designated time frame. So in this case, this is a 4-hour time frame, so we'll be waiting to see a shift in market structure from this key level right here. And if we box this out to the low and say we want to see a 15-minute shift in market structure from that key level, let's go down there and see what it looks like. So right here, so if we go to, let's go back to 4-hour time frame. I'll make this a different color so we can be able to differentiate where that is. So I'll make this, so this right here. So we'll go to 15 minutes time frame. On the 15 minutes time frame, you can see that very clear as day right here. A break of structure from our key level. The line chart is showing us this is an extreme discount, and price in that extreme discount, look what happened right there. We saw a 15-minute shift in market structure. This is showing us, giving us a telltale sign that we should buy Aussie dollar at this key level, no matter what it takes. We just get in a buy, and look at what happened. Price expanded to the upside. That being said, let's focus on the current price action, and on the current price action, we can see very clearly as well. We go back to the line chart. We'll pick our high and we'll pick our low as well. This right here is our low. Now, what are we looking for? We're looking for potentially for price to come down to this key level. Once price is down here, we'll be looking for a buy to continue higher. So I'll remove this one because I don't need it anymore. So we go to 1-hour time frame as well. On the 1-hour time frame, let's see what the 1-hour time frame looks like. If we use the Fibonacci from the low of the 1-hour time frame to the high, I'll make it a different color so we can differentiate. You can see on the 1-hour time frame. So let me clear everything for 1 second. This is the 1-hour time frame. This is the high. This is the key level where I'll prefer to buy from on 1-hour time frame. Let me put back everything. Let me remove this for a second. Let me remove this as well. So on the 1-hour time frame, you can see that the 1-hour time frame and the 4-hour time frame, this key level here becomes our point of interest. From here to this overall low, that becomes our point of interest where we'll be looking for price to come into. Once price is in this key level, this entire zone, all we'll be looking to see is a 5-minute shift in market structure from this entire key level. and then we look for a buy. So let's go back to 4 hour time frame. I'll remove this one. So we just work with only the 4 hour time frame. So the 4 hour time frame low, 4 hour time frame high, and this is our equilibrium zone, and currently we're at a discount zone. So this is the key level we're anticipating to see price come back into for a potential continuation to the upside. And now we go to the bar chart to see what that area looks like. And what does it look like? We have an inefficiency resting right there. We go to 1 hour time frame, and on the 1 hour time frame we can see price created a high right here, created a low, and then we'll have this break of structure right here. So you can see this as well. This is the break of structure. So all we want to see is potentially price sweep this liquidity, come down into this position, and then we're looking for a buy. So right here, I'll just put a line across the high of this 1 hour time frame. So once price mitigates the high of this 1 hour time frame, all I'll be looking for is a shift of market structure on 5 minutes time frame, and then I'll be looking to get into the marketplace. So that is my analysis on Aussie, and I'll be watching this very closely from today, tomorrow, and for the rest of the week. Even if this plays out on, even if it plays out on Friday being the non-farm payroll, and I see everything aligned, I'll be looking for an entry into the market. So that is my analysis. If you do have any questions, feel free to drop it in the chat. I appreciate you all for tuning in, and I'll talk to you all next time. Have an amazing day, everyone.